Now, as we turn to Europe, we get to look at where some of our additional inflation is going to come from. Because when you look at what the U.S., we're net importers. We import goods. And one of the things that I've been saying from the very beginning is we import inflation. So inflation is just, it's there. And based on what we've seen so far in India, we're going to talk about Chinese numbers and India's numbers in segment 5. But we're also big importers from Europe. And I think it's important to look at where things are shifting and how they're shifting and what that's going to mean for the U.S. Consumer. So in the Eurozone, the retail sales month over month dipped against estimates. Were expected to be at 0.5, came in at 0.3. Year over year was expected at 4.9, came in at 5%. That's something that we expect to slow down further in March because those are February numbers. And then the survey expectations, the ZEW survey expectations came in at negative 43. The prior month was negative 38.7. So obviously, again, wrong direction. So now when you look at Germany, industrial production was expected at 0.2, came in at 0.2. Year over year was expected at 3.7, came in at 3.2. That's for Feb. Industrial production maintained, like we should see positive growth in March. We think it goes negative in April, given where things have shifted. And the problem is going to be on the production front, because it could go negative in March purely because Germany was unable to get the equipment it needed, the raw materials it needed because of what happened with Russia. And when you look at how exposed, countries are in Europe to the Russian shakeup from natural gas and oil perspective, Germany's number one. So again, they're also one of the biggest exporters in the EU. So that's just more pressure, which is why when we look at wholesale price index, the wholesale price index month over month came in at 6.9%. So last month, wholesale prices went up 1.7. This month, it went up 6.9%. Year over year last month was February was up 16.6. March was 22.6%. And that's only catching the tail end of Russia-Ukraine. So again, there's more that we see coming. And that's where, again, the prices are going to continue to go up. CPI expected at 2.5, came in at 2.5, year over year, 7.3, 7.3. So it's the wholesale price index that is kind of that gate where you're looking at this. That's a key leading indicator coming on down, which is why when we look at survey expectations, expected at 48.5, came in at 41. Current situation was expected at negative 35, came in at negative 30.8. But it's still down from the previous month. So it was better than expectations, but still worse than the previous month as we see some of this degrading capacity. Now, inflation, again, something similar to as we talked about in segments 1 and 2. In segments 2 and 3. There's always this smoothing, like the ECB staff projections. It's like, it's peaking this month, and then it comes down. Oh, no, it didn't peak this month. It's going to peak next month. So when you look at just how it's gone parabolic and how they keep expecting inflation to just roll over, this is why the expectations are so wrong, and the ECB remains asleep at the wheel. So now when you look at global Eurozone productivity PMI, the PMI is already coming, when you look at the real labor productivity, coming back down. Eurozone productivity PMI is already negative. It's below 50. You're already contracting. And again, that's going to pull more of that down. But when you look at the rise in rates, will eventually weigh on the economy more so because at the same time, they haven't been able to really get that higher. So when you look at this movement, when you look at this pressure, the Eurozone manufacturing PMI is going to drift down, especially when you look at China was a big buyer of European goods. They're not there anymore, or at least they're not there in the same way. So there's more and more pressure to just European health and the economic growth. German manufacturing orders, again, still growing, still there. That's something that we see based on February. February, as we said, we're still going to be good. March slows, and then April is where we think there's a bigger problem. Industrial production, excluding construction and energy, fairly flat, but again, still well below where it was in 2019. And as it's flattening, we see this kind of a rolling over and putting some of that additional pressure. And then this just puts into context how big the move in wholesale prices year over year. And then month over month, we're going back to 1969, you get an idea of the magnitude of the shift in wholesale prices and why there's going to be this underlying pressure point when we look at the European market and the European theater. So then when you look at CPI consumer goods coming in at 16.7%, surging back up, but then the Eurozone median inflation going back to 1996, you're just seeing the underlying pressure. Like I don't know how many times I could show these charts, but Europe is in such a tough spot in comparison even to the US that when you look at the globe in itself and think about where are we going to see the pressure points, this is one of those big ones that we think is going to have the biggest problem. German construction PMI came in at 50.9, obviously coming further down. Supplier delivery times getting worse, and it will continue to get worse because of obviously what is happening with Russia. But we do expect to see PMI come negative and actually show contraction as we progress into March. German industrial output in goods, again, coming back down. Intermittent goods, again, starting to roll over. Consumer goods kind of coming back up. All of these, as we've been saying, is showing some of that pressure, which it's either negative or it's starting to roll over. And it's going to take time. This is only obviously catching things until Feb. But then when you start looking at March into April is where we see that accelerating downside. Construction total activity, same thing. When you look at total activity in general, construction has always been a struggle. We showed some of the expectations and some of the early numbers, and here's where you can see again that pressure and that negative data coming out. Now, when we look at Italy, industrial production came in well above expectations, but that was February. As we were saying, February should be good. March is going to be a bit worse. Same with retail sales. Spain, on the other hand, was similar on the industrial front. But then when you look at CPI is accelerating a bit faster in Spain, and that's something that we think is going to hinder those retail sales and industrial capacity. And then when you look at the Italy retail sales, still remaining strong. We expect it to come down, but just back in line because they've done a decent amount of kind of managing the consumer and managing their spending. And based on the amount of stimulus they've put out, they're a bit better off in the near term. They will get that fiscal drag that we've seen in the US. It's just they started a bit later, so they're still carrying that through, and that'll start to come back down, back towards that level. Spain industrial production, something similar. That rollover is where we expect to see that come back and that pressure continue to mount. So not much on Europe, just because there isn't much to talk about that we haven't already said, so we don't want to begrudge the issue. This is some of the new data, and as the new data continues to come out, we'll focus on it and talk about it. But now in the next segment, we're going to look at Asia and things that are happening more specifically in China and India.